Don Luskin, I want to start out with the good news, the ADP jobs report, which I think really boosted the economy. Small business job creation led the parade. We may get a better than expected number on Friday. So as China slows down, is the USA rising? Are we speeding up, Don Luskin?
Oh, look, it depends where you look, Larry. There's some evidence that looks good and there's some evidence that looks bad. You know, it's the jobs, I guess, look okay, but forward S&P earnings still are off their August peak. We've got, terrible capital goods orders. We've got terrible diesel fuel loadings in America's trucking fleet. I don't know. I think it's a mixed bag. I wouldn't get so optimistic.
Michael Farr, mixed bag. Okay, I'm going to play this on the optimistic side, but whatever. I want to just ask you briefly about this crazy Fed story. So the Fed, let me get this right. They're going to buy bonds, but they're not going to inject money because after they buy long-term bonds, they're going to sell T-bills to the dealers, so-called reverse repurchase agreements, and that's going to take the cash out. So first they put the cash in, then they're going to take the cash out. That in a Wall Street Journal story. Some reason people in the market seem to like it. I think it's all a bunch of fine-tuning hooey myself, and they ought to just defend the dollar. But you give me your take. You think this is a wonderful thing?
I think it's hooey. I mean, I think that is the hokey pokey, right? The left foot in, the right foot out. You turn around, and that's the way the whole thing. Nobody can figure out how that dance goes either. So this Fed is coming up here with some new version of Operation Twist. And look, we're still back to the Paulson paradigm where if the economy starts to slow down, you don't need to worry because the Fed's going to come in and buy stocks. And if the economy doesn't slow down, it gets better, you buy stocks. So we're running this huge risk of moral hazard. These guys, I think, are really creating a very dangerous situation that I don't like. But, geez, you really can't stay out of markets when they're doing this. Stocks need to pull back. This timing is for a pullback. These markets have to be allowed to clear without so much government money, Larry. I think they're going to screw it up.
All right, Don Luskin, he's making some pretty good points there. I want to ask you, you didn't sound that bullish, Don, which is fine. Don't get me wrong. I just want to know, if there is a pullback here, are you buying the pullback, Don Luskin? That's what I want to know.
Yeah, I am. Just because I'm not thinking that the economy is accelerating into some kind of new boom, that actually doesn't make me bearish because stocks are still incredibly cheap. On this crazy Fed news, I'd like to weigh in on that. I think the reason why they're coming up with this incredibly contrived, dare I say, twisted stuff is we've got a couple influential members on the Board of Governors and the FOMC who are just frothing at the mouth to do QE3. It's an election year. They're staunch Democrats. They're big government people. They don't want to admit that QE2 didn't work, so now they want to do QE3 bigger. Right now, Ben Bernanke is the most hawkish member among the influential members on the Fed, and he's coming up with stuff like this just to throw these people a bone to do the least harmful thing that can be done, because if we don't do crazy stuff like this, it's going to be $1 trillion QE3. No. So, I mean, I would be thankful for small favors if they pull off some crazy scheme like this.
I think crazy stuff like this can really do damage to the dollar.
I almost never disagree.
Go ahead.
I think it will. I think it will, but I think, too, I don't typically disagree with Don, but I don't see anything hawkish about Ben Bernanke. I think he's throwing money with both hands as fast as he can, and I think he happens to be pretty dovish. But more than that, I think these guys see real policy risk out of Washington. This crowd can't get their act together. We've got real fiscal constraints that are coming down the road. We've got a very tough December. You get past this election, and all of a sudden these spigots are going to get shut down. I think the Fed is setting us up to inoculate the economy against some crazy actions of, sort of political rabid people who won't take a methodical approach.
I think if the Federal Reserve continues to monkey around like this, they're going to damage the dollar, they're going to damage a higher inflation rate, and they're going to do more harm than good. Don Luskin, what's your take on this new Apple 4G? Let me see if I get this right. The highest 4G is going to go for $629. The old iPad goes for $399. Do you like it, my friend? And why didn't Apple stock go up? Everybody else did.
Look, I'll tell you why Apple didn't go up. It's because everybody from the shoeshine boy here at Rockefeller Center to Jim Cramer is saying buy and hold Apple. Okay, it's done, it's done, it's done. Steve Jobs is dead, so is Apple. It is a movie studio of a business. It needs more hits. How many more hits can they do, especially without Steve Jobs? It's over.